So this is the 3 biggest reasons why you're losing money selling put option. And I'm gonna break it down in this video into 3 points. Number 1, you're selling put options on individual stocks instead of the index. Number 2, you're putting too much emphasis on the technical analysis. And number 3, that's the biggest reason, and no one else is talking about it on the YouTube channel, so stick until the end to see what that is. Let's get into point number 1, why you should be selling put options on index fund instead of individual stocks. I'll be using Shopify as an example. Shopify is a multinational e-commerce company, which is the biggest e-commerce company in Canada and almost worldwide as well. So if you're any Shopify investor who has been selling puts on Shopify since 2018, the stock has been moving up from $13 to $40 to $34, up to $52 in February 2022. Even the COVID dropped from $54 to $33, and then it continued to go up from the COVID timing all the way back up to November 2021. So really for the past 3 years, you're making money because the stock doesn't come down too much, and whenever you sell a put, you might not get a sign, and if you get a sign, you can turn around and sell a cover call. Now, when the time you start losing money is whenever the stock has a huge drop. So for the last 3 years, between 2018 to 2021, you have been making money. Selling puts has been very lucrative, you're very happy, and now coming November 2021, that's when the problems start happening. Because Shopify has started dropping drastically from $168 all the way down to as low as $24 on the stock price. And during November 2021 to October 2022, you will not be making money. As a matter of fact, no matter where you sell the puts around this area, whatever your strike price is, right, you will still get a sign and you will be holding back, going all the way down from 140, maybe 130, all the way down to 25 or 24. And not only you will be giving away all the premium you have been receiving for the past 3 years, but also you will be holding all the bag and seeing your huge negative on your account of almost 70% to 80%. Let's say you were lucky, do not sell puts on any individual stocks like Shopify who have dropped 70 to 80%. Now you pick a basket of 5 to 10 stocks. Now in my experience, out of the 10 stocks you pick, 9 of them will go up, 1 of them will go down, and that 1 will be a stock kind of like Shopify, because it's really hard to pick stocks and to avoid any of those mistakes, and you don't know when to take losses. You might be thinking that you're gonna hold it for 10 years, but in the short term, you're losing money on your account. So from my experience, you can pick 9 good stocks, 1 bad stocks, and it's a wash, or even worse, it could be in the negative. So all the cash flow you have been collecting from selling put options every month will just be washed away whenever there's a big market pullback. And also, another big reason why you're losing money when selling put options on individual stock is that your portfolio is not diversified, right? Most people, you might have $10,000, $50,000, even $100,000 account. When a Shopify is as highest, it's at $160. So if you sell a put option on Shopify, you're ready to own 100 shares of Shopify, and you have to set aside $16,000. Now, let's say if your account size is at $100,000, you can only sell 5 to 6 put options on Shopify. Even if you try to diversify, you can only diversify into 5 to 6 stocks. Now, on the other hand, if you're selling put options on index or ETF or a more diversified portfolio, you will have less volatility. And that's where you will get a more consistent cash flow you desire. Second reason why you're losing money on selling put option is because you put too much emphasis on technical analysis. I know a lot of you guys out there trust that the price action is where you can track where the money is really flowing. But price action, because of all the recent quant trading, algo trading, it will exaggerate all the up movement and the down movement, and it can actually create a false sense of action and momentum. So if you follow a lot of their momentum and you don't know how to take a use of those and what's real and what's not, and you're focusing on so much of the short-term action, it can actually force you to make the wrong decision. Instead, you should take a step back and focus on the bigger picture and just focus on where the strong support and resistance, and just use a few indicators and not fixating on so many indicators. Because if you use so many indicators, you're gonna get into the analysis paralysis and you end up not making any decision or make the wrong decision. So just keep it simple and use the basic support and resistance level to make a decision on your selling put option. If you liked the video so far, make sure you give us a like and hit that subscribe button. And I also created a free webinar to show people how to sell options on index funds so that you can get a more consistent cash flow. So click a link in the description. Now let's get right into the third and the most important points that no one's talking about on YouTube. When you're selling put option, do you actually look at what are the sweet spot for your VIX? VIX is a volatility index that tracks the S&P 500 movement. Usually when the S&P 500 index pull back, the VIX will go up and there's more uncertainty and there's more fear. Now, when the VIX goes down, generally means that we have a green day and the stock market is going up. And here are some key stats for you to help you find a sweet spot of the VIX level, so the next time when you sell the put option, you have a higher win rate. So let's look at our screen here and look at the historical price for VIX. The lowest level of VIX for the past 5 years happened between 2018 to 2020, right before COVID, and it was hovering around 11.5%. And the next lowest point of VIX for the last 5 years happened between April 2021 to November 2021 and hovering around the 16 level. And in the last few weeks, we have been approaching VIX level of 16, which is the second lowest level in the last 5 years. So you might be wondering, what is the highest level of VIX in history? The highest level of VIX in history is in 2008. That's when the financial crisis happened, and that's around 90. And the second highest is when COVID happened, and that's around 85. And here's the most important part. For the last 30 years, the VIX averaged between 16 to 20 most of the time. We do have some anomaly, but most of the time average between 16 to 20. So whenever the VIX is above 20, you have a higher chance of making more money. And also VIX has a mean reversion nature, so that whenever VIX spike up, it will come back down. And whenever the VIX is too low, it will spike back up. So as an option seller, you want to sell when the VIX is a bit higher. In this case, you want to sell more option when the VIX is above 20 and sell less option when the VIX is below 16. And there you have it. If you have any question about selling put options on index fund, put it in the comment section below. I'll see you on the next video. Say yay.